What is going on, everyone? Welcome back to the channel. This is episode 4, meaning this is our 4th trade since we started this series, where I just post every single trade I take. Now, this is the first loss of the series, although it was quite a small loss because we managed it. And that's what this video is really going to be about. It's about how to think in probabilities and how to sort of not think about the outcome of a trade, rather thinking about maximizing the probability of your long-term strategy. So let's break this down. If we look at our MetaTrader over here, so you guys can sort of keep up to date with how this sort of challenge is going, I guess. This has been my results since the start of this challenge. So we had 3 trades last week, and the start of this week yesterday on Monday, we had a very small loss. So minus about 0.5%, bit less even. You can see over here on GJ, we only lost about 10 pips, right? So about 10.5 pips. And if you look at our position over here, it was actually about 25 pip stop loss, right? So we closed this one quite early, right about, if we look over here, about here. Okay, so that was sort of how the position looked. We sort of got in some drawdown. It sort of didn't really do anything. There was no volume. Then we got that little push, and then it came back down, rejected, and I decided enough's enough, right? So let's break it down. Let's sort of analyze how we sort of took this trade, and you know why it was still a good trade in my opinion, and then how we managed that trade and not just sort of let the trade hit stop loss even though everything was pointing against the trade, right? And this is something you learn sort of as you keep trading. You start to not really care about whether this trade wins or, I mean, obviously it's always going to be there, but you start to sort of approach the market more in terms of, you know, how can I just take the highest probability things, you know? And once you start seeing the market in terms of just simple probabilities and not really outcomes, and you more sort of focus on maximizing that process to increase the probability, then it becomes a lot easier and a lot less stressful. So that's sort of the lesson, I guess, of this episode. And let's get into it. So we're going to remove this. You can see this was taken on Monday, right around that London session, and today is Tuesday. So let's go back in time on on TradingView, and let's break it down. So you can see over here, this is that sort of pre-London 4-hour candle, right? So you can see we are sort of stuck in this range right over here, okay? You can see yesterday we came down, on Friday, I guess, you came down, then you sort of created this support, now you're sort of stuck in this range, okay? So for me, it was very simple. I said, we can either look to trade sort of price rejecting the top of this level and continuing down, okay? Although I wouldn't ideally want to trade in this range. You can see there's a lot of sort of, if you look on the 1 hour as well, there's a lot of sort of noise in this area. I would rather have just waited for price to break back down below these lows over here. Okay, but I told myself, if we can start seeing price sort of create strong structure, creating higher highs, higher lows, forming support, breaking new highs, we can look to sort of attack this range. You can see quite a nice clean range we can look to attack as well. Okay, so that was sort of the plan heading into London. It was a bit of a mixed session, although, you know, I like this range above. Sort of, you can see all we're really doing yesterday was seeing we created a high, we came down, found support, new range formed. If we can look to sort of break above, it's sort of just like a higher high, higher low structure, right? And that's what we try to capitalize on. So if you go down to the hourly, this is still, this is too early. So we got to go back even a little bit more. So you can see here, we got this hourly structure above here, and I'm just looking for price to break above here. You got a very nice clean range above this level about, how long is that? 31 pips, so quite a nice clean range. I was just looking to see price break above this key level over here. Okay, if we look at the 15-minute time frame, you can again see that same sort of idea, how the lower time frames is sort of working together with the higher time frames, where we just have this big higher high over here, we come down, form support. Now we're sort of creating this sort of small uptrend, and we have a nice area which if we break above, we can push through and at least sort of reach back up into these highs above here. Okay, so that was the plan heading into London. And let's just fast forward a bit, see where we end up. Again, this one was a nice breakout, right? You can see you can use a little nice wick fill over here. Clean stop loss, clean breakout. The only thing is, again, it was still a bit early, right? Which is a common theme. We're seeing a lot of early breakouts in the last couple of trades, but just wait for that sort of 1:30 to 2 a.m. Eastern time when that London volume usually tends to kick in. Okay, but that was the plan, and you can see you sort of, again, no real volume, and that's the danger of taking these trades too early, trading outside of your session, right? So we just wait, and then we see this. The reason I didn't take this one was because the new candle opened up and just sort of pushed straight away, right? Or let's see, I can't even remember what. Yeah, no, that's what happened. Sorry, excuse me. The new candle didn't even break the highs, right? The other reason I didn't take this, I'm just remembering now, is if you look at this 30-minute structure, you can see it's sort of overextended, right? Each new 30-minute candle is sort of coming less and less, right? It's slowly sort of decreasing. You can see there's no real volume. It still makes sense, but I never love this sort of pattern where you have sort of 3 bullish or 3 bearish candles and they're sort of decreasing in size every single time. Especially when it closes like this with a big tail and then just this small sort of head. It's sometimes a pattern for me that it's just the volume is quite low and there isn't enough sort of liquidity or enough volume to continue pushing. Okay, but realistically, you could have taken this, but it never broke the high either way, right? So you're not really in any real danger because it never broke the high. So never really looking to take that. Then you can see, again, never really came back, never broke the high. And then there, this is the breakout trade we were looking for. You can see that there's that liquidity being taken now. Nice deep retest coming back into these lows, rejecting, closing above. It looks very good, right? If you look at the 5-minute time frame as well, nice sort of clean retest coming back down to try and sort of push down, but it's rejecting heavily at this 15-minute hourly level, closing above. So at this stage, I was like, sweet. We can obviously see there's a bit of volume. The only thing I didn't love about this was quite big stops, right? About 25 pip stops, which is quite big for me. But I thought there's a pretty decent range to the top. And we have about, 10 pips to this sort of nearest 15-minute level where we can look to manage, okay? So that was the trade. I was looking just break at the high to see if we can enter. And as you can see on the 5-minute time frame, very nice, clean structure. Everything sort of pretty picture perfect except for the big stop loss, right? But otherwise, I was very happy with the trade. The only other thing was Mondays tend to be a bit slow. So I'm always a bit cautious taking a trade on Monday. And it was also a Japanese yen bank holiday yesterday, okay? Which in hindsight is always like, you should never really trade on bank holidays. But a Japanese yen bank holiday, in my experience, doesn't have that big of an effect, especially when you're sort of trading in that London session with British pound. But nonetheless, you can always go back and say, in hindsight, I shouldn't have taken it. But that's just hindsight bias, right? If this trade won, I would have been very happy with it. I wouldn't have even doubted it. So you got to start thinking, not in terms of, oh, I should have done this, I should have did that, blah, blah, blah. You know, that's just a very quick downward spiral. You got to back yourself and just say, look, at the end of the day, I'm happy with this trade. The structure is there, the rejection is there. You can clearly see this higher high trend. Price is sort of rejecting these lows. You got the 4-hour time frame confirmation. You know you're moving into clean range. You know you have high probability with this pre-London volume. You know, at the end of the day, you got to take that risk. And for me, I was happy with it. Okay, but as you guys can see, if we fast forward, it sort of just did nothing for quite a bit, right? You had a little push, and then you had that big rejection. And at this stage, there was nothing really you could do, right? You could tell yourself, let's see how we react to this sort of previous level over here, which was sort of what I did. I wasn't 100% prepared to take a full loss. And if you look at the 1-minute time frame, I was just waiting for some 1-minute structure to form. And then I was sort of like, once this happened, this sort of rejection at this previous level, I told myself, okay, let's just, take it slow, see what happens. We have this level over here, which we can use to our advantage, right? If price starts breaking these lows with sort of strong breakdowns below, we can always just look to re-enter, close this trade, move on, okay? But for me, I was just waiting to see what happens, waiting to see how we rejected, if we reject this previous level. As you can see, we sort of, we trickle with that sort of previous levels. Over here, I was about to close and I was just looking, just waiting to see what happens. And then you can see we sort of get that rejection, okay? Now, the thing I want to stress here is, for me, the thing when this stuff happens is you got to realize you're in control of the trade, right? Just because it's going against you doesn't mean you're not in control. You always have control in this trade because you know this sort of level over here where you can sort of close this trade early and realize, I'm happy to close this because the probabilities are not in my favor, right? Why would price come up, sort of retest back to this level and then start breaking these lows again, right? It doesn't make sense. So that's what I thought. And as you can see, it finally got a bit of volume, started pushing. And again, this is that level we were sort of looking, and then again, more struggle. And then finally we got that push there. So this was that sort of level I was looking to go break even. You can see we never really tapped into that level. And once this happened, I told myself, okay, I still like this trade. We're still making new highs. We're still sort of rejecting previous levels. All I said was, let's just manage it, right? If it goes down below these sort of levels over here, back down to these previous levels, we can just look to manage it, right? And that's what I did. Started scaling down to the 1 minute time frame and just looking to see how price was behaving. So this was the initial level I was looking to close this trade at over here. But you can see as we push forward, it just sort of ripped straight below that level, not really giving me a chance. And then as soon as we sort of pushed back down to these lows over here, I just closed it, right? So closed it at about, let's have a look here. Closed it right around here, right? So as you tapped into these levels, broke this low, I saw this strong breakout, and I thought, you know what, we're breaking like previous structures, we're breaking previous 15-minute lows. If you look on the sort of MetaTrader over here, you can see on the 1 minute, if we can find it. No idea where this trade is. That's actually something someone should really invent, just find your trade quickly. Anyway, you can see here, this sort of 5 minute low over here. I was just looking to see how price was reacting to these levels. You can see we still have higher highs being made, sort of coming back into this previous level of support. And as soon as it broke those lows on the 1 minute, I was like, you know what, enough's enough. There's no volume. This thing's just doing absolutely nothing. Let's just close it. And that's how I managed that trade. So yeah, very happy with that management. Saved ourselves about 0.6%, which I'm very happy with. And we move on to the next week. And you can see sort of, if you just look at these, like a managed trade does so much for your confidence, for your equity curve, for just your long-term sort of engagement in probability trading. If you can sort of tell yourself, what makes sense to me at this stage is closing it below this level because we're breaking previous structures. It doesn't make sense to hold this trade. And then you close it and it actually saves yourselves like quite a lot of money. It's a really good feeling. But at the end of the day, we could have closed this and it could have just ripped up, right? And that's something you got to accept. It's something you got to realize over time. If you backtest, you realize things like this is not always going to work in your favor, but over time it does tend to save yourself a lot of grief. So that was a trade. I'm very happy with that trade. You can always sort of ask any questions if you guys like, but hopefully that explained it quite well. See you guys soon for the next trade.